Hi, everyone. Welcome to our June 2023 Money Matters webinar. And the topic today is going to be buying your first house. We're going to be covering all what's included on the process of buying one, what you need to do to get prepared for it, all that kind of fun stuff. My name is Matthew, and I'm with United Way Suncoast. We launched this partnership in collaboration with USF to bring financial stability information to folks across the Suncoast community. So glad that you can join us today.
Thanks, Matthew. Welcome, and we're glad you're joining us today. I'm Dr. Peter Trakis. I'm the director of the USF College of Education's Gus A. Stavros Center for Free Enterprise and Economic Education. Over our 40-year history, the Stavros Center's main goal is to advance the effective teaching and integration of financial literacy and economic into curriculum. We provide resources in support of educators, students, and the community from across the Tampa Bay area. We provide training programs, curricular development, and other strategies to ensure that free enterprise and consumer economics are integrated into society. For today's presenter, I'd like to introduce Madeline Diaz. As a trusted advisor with Truist Mortgage, Madeline offers more than 20 years of industry experience and an extensive practice in originating both purchase and refinancing of home loans. Her main goal is to build better lives and communities by offering clients the professional guidance and support they need to make their home financing decisions. Thank you for joining us today, Madeline.
Well, thank you, Peter and Matthew. It's an honor to be here, to be able to share some knowledge and guidance, and most important, hope. Hope is very important, and that plays a large part. And helping homeowners achieve their dream of home ownership is very passionate to me. One thing I definitely want to be able to say, as a community, a mortgage specialist, I serve as the liaison between realtor organizations, community, local government, program agencies. My focus is affordable home loans, grants, down payment assistance programs, and the goal is for me to be able to share and leverage my 20 years experience to, help everyone achieve their dream of home ownership. Truist purpose and our mission is basically to inspire and build better lives in communities. Because when we build better lives in community, we are enriching the neighborhoods that we live in. We are enriching the neighborhoods our children grow up in. In today's agenda, we're going to be covering, is home ownership right for you? Budgeting and savings, planning for home ownership, and the navigation process. I don't want you to worry, you'll be able to have access to all of this at the end. And we will be focusing on answering your questions at the end. Are you ready for home ownership? Okay. Renting versus buying. Okay. There are benefits on both. And purchasing a home is a personal decision. Okay. Yes, your benefits of renting is that you have flexibility to live in a place, for a short time. You have no maintenance responsibilities, free from added costs like repairs and taxes. Okay. But there are a lot of benefits in buying. You have the opportunity to build your equity with every payment that you make. When you're paying rent, you're not building equity. When you're owning a home, you build every money that you pay every month is going to go into towards building your equity, providing a legacy for yourself in the future. It does have potential tax advantages. When you rent, you're not able to write off the interest of your mortgage payments on your taxes, but please consult your tax preparer on that. Whereas in owning when you pay a mortgage payment, you're able to write that off. You do know what your monthly payments are going to be. In today's market, unfortunately, it's been sad that many people get a notice from their landlord saying, hey, by the way, your rent is going up next month by $500. And that's going to tremendously impact all families. You have control when you own a home. Okay. And most important, as I was saying, you're building a legacy. You're building a legacy for your children. And and it's an inheritance that you're passing on. Okay. But as I say, are you ready? Okay. I mean, these are questions you should be asking yourself, do I have a reliable income source? Okay. Do I have time to take care of the lawn? I say just hire a lawn guy like I do. That takes care of that. Okay. Do you have time to devote to your home right now? Yes, I run into a lot of projects, but I enjoy it. I do enjoy it. Okay. Do you have the money saved? When you make a decision to buy a home, when I ask clients, when I do the application, how much have you saved? My responses is always, I want to see what kind of down payment assistance I'm going to get. Okay. The question I'm trying to get at is, when you made that decision of purchasing a home, of your savings, how much did you say, okay, I'm putting this aside to buy my home? Okay. So these are things to definitely, think about. Okay. Most important, budgeting and savings. That's the three main budget strategies. Your budget, you think about it, it's a map, and your buying and savings habit is your direction. Okay. So pay attention to your directions and you'll get to where you want to get to. The three main budgeting strategies: control your spending, manage your debt, and save for the future. Okay. What does control your spending look like? Make a budget that's realistic and reasonable. Okay. Let's say, for example, you love Starbucks. Okay. But is it reasonable to buy a $7 cup of coffee 2-3 times a day, 7 days a week? Nobody's saying you can't have your Starbucks. Just maybe once a week. That's something to think about. Cutting cost usually, helps, perhaps not a lot of takeout food, maybe only once a week or twice a month, So those are like the little tips, Do your periodic checkups. Make sure that you're getting the best deal, that you're cutting cost, research insurance, cable, wherever you can get the largest amount of savings. Number 2, managing your debt. Okay. A good rule of thumb is to use 10% of your monthly income to pay down your debt. Okay. 10% of your income, but do this religiously. Okay. And you will see, if you can't do 10%, then do 5. If you can't do 5, then do 2, start somewhere. Okay. Reducing your debt. Okay. As you approach the home buying process, absolutely avoid creating new debt. And especially when you're in the middle of a transaction, I tell my clients, put that credit card away. I don't want you to look at it ever. Well, just until after closing, and save for the future. We all know that sometimes we spend money that we really don't need to spend, but if you automatically maybe speak to your employer and see if a certain amount of your check, whatever you decide, it could be $10, it could be $25, something, to automatically take it out of your paycheck and put it into a savings account, because sight unseen, you don't spend it. Okay. That's just a little tip there. You're going to have this household budget workshop available to you. And also you'll have available, just an idea of how much you'll save if you send even $10 that you didn't save before. It gives you $600 a year, Okay. Now, here's a little knowledge check. Okay. You can answer it in the chat box. Should everyone buy a home? Appreciation is an increase in home market value. You should create a spending plan. Okay. So you could put your answers in there. And then at the end, when we do the Q&A, we'll come back and check this. Okay. Now, planning for home ownership, like I said, you have to set up a plan. When I decided to buy, and at that point I was buying and selling, I literally went into my calendar and I said, in April, I am going to put my townhouse on the market. And in May, I'm going to close on my new single family. You have to make this realistically. Put it on a calendar, put it a date, put it on your mirror. And that's your goal. Because if you don't set a date, you have nothing to reach to. You got to have like a deadline. It's like when you're in a race, you start and you finish. Okay. I want you to understand what impacts your ability to, qualify for a loan. The primary areas is your income. Do you have sufficient income to pay a mortgage payment and other debts? We also look at your debts that are on your credit report, okay? Income stability. Do you have a regular income that you know that you can count on? Your credit history. How have you been handling, those credit obligations? You're changing your housing payment. Is there going to be an increase? Do you have cash to close? Do you have enough money available to pay the required down payment and closing costs? And we're going to cover what that means, okay? An appraisal. An appraisal is basically you're ordering, the bank is going to order an appraisal on the third party by a third party, and it's you proving to the bank that the property you want the bank to invest in with you is worth the value that it is in today's market, okay? What make, credit, it's the heartbeat about absolutely everything, not only for buying a home, even as far as military clearances sometimes, okay? Excuse me one moment. I drank a lot of water, Matthew, before getting started. I'm still coughing. I don't understand. What makes up a good credit score? The $1 million question. I tell you one thing, the bank rolls out the red carpet when it's up there with the 700s, but that doesn't mean that you can't get help if you're 620. Okay. That doesn't mean that you can't get help if it's below 620, because we work with our trusted nonprofit agencies that will put you on the right path to get to where you want to get to. So look at your credit score where it's at today, and then you're going to think about where you want to go. A lot of people have gone through challenges in credit. I sure did when my husband passed over 10 years ago. And it was a turn of the market when the property values were upside down. I had to let go of the house. Well, guess what? My credit score went very low, but I worked on it, and I've bought 2 houses since then. So having faith and hope, as I said in the beginning, is very important, okay? Making up your credit score is your payment history. As you can see, is 35% of your credit score. Your total debts, we discussed before, your focus is, you want to lower your debts. How long have you had credit history? What type of credit? And inquiries. Be very wary of inquiries, especially when you're nearing the time of wanting to apply for a mortgage. When you go to the department stores and they say, hey, fill out this credit card application, will give you 20% off. Well, every time you do new credit, it takes a hit on your credit. And also sometimes it takes a month or two for it to bounce back. So we want to really take very good care of our credit score. We want to be very cautious about who we co-sign with. Do you really want to co-sign for someone? Because whatever they do is going to impact you, okay? One of the other things that the bank looks at is debt to income ratio. If you have a piece of paper in your hand, do me a favor, just fold it and cut it in half. Each half represents 50%, okay? So debt to income ratio means, to put it very, simple to understand, if you're getting $1,000 a month and your household expenses and debts are $500 a month, then that's 50% of your, that's 50% debt to income ratio, okay? Some organizations say that, some loan programs, because every loan program is different. Some loan programs say we don't want you to spend no more than 43% of your money coming in, going out, okay? Debt to income ratio is the percentage of your gross monthly income that goes to paying your monthly debt payments and is used by the lenders to determine your borrowing risk. A low debt to income ratio demonstrates a good balance of debt and income and less risk for a lender. Now, steps to take while you're planning is, assessing your income and spending habits, understanding the full cost of buying a home, your down payment and affordability options, fees in the mortgage process. Establishing a realistic budget, as we discussed before, is absolutely important. You want to be able to control where your money is going and how your money is being spent. Your understanding of the full cost of buying a home. It's not just down payment. So let's say the house is 300,000 and you're putting down 10,000, that's 290,000. So that's the difference there is the 10,000 you're putting into, which is referred to as down payment. You also have closing cost, okay? Look at it this way to understand closing costs. Another scenario, when you go to the motor vehicles, I think here in Florida, we call it tax collector's office, and you're coming from out of state and they give you this long list of fees that have to be paid, okay? That's the cost of the transaction, okay? You still have to register your car, right? But you have to pay those fees, okay? We're gonna cover what are those fees, okay? Moving costs, budget into your budget, how much you're gonna spend. Start researching how much it's gonna cost for someone to, you know, move your items from point A to point B, okay? And within your closing costs, you also have, you know, what are your recurring expenses, okay? Your utility bills, and think about your cable. This is all within your budgeting. Your property taxes, insurance, maintenance, and upkeep of the house. Build a little savings account. That's what I always say, you know, in a savings account where you, in the event of an emergency, you have what they call reserves available to cover your expenses, okay? Now, the down payment, okay? There are programs that have 0% down, and you have programs that have 5%, 10, and 20%. But in addition to down payment, there are other fees and expenses, as I discussed, which are called, you know, closing costs. Now, what to know about down payments, okay? You want to be able to shop around, find the lender that has the lowest down payment programs available. FHA loans do have what they call, you know, excuse me, that's a correction. I just noticed that was incorrect on this slide. FHA loans allow as little as 3.5%, and this will be corrected, Matthew, before it's sent to you. Many conventional loans allow 5% down. Now, what's the difference between the FHA and conventional? We're going to cover that as well. You know, your debt to income ratio is underwriting factors. Underwriter is the person that is going to do the final approvals, okay? And once they look at your file, it can be, perhaps they might say, well, they might need a little bit more down. But your loan officer at the beginning should be the one that tries to eliminate any surprises when it gets to underwriting, okay? There are programs, there are down payment assistance programs throughout the state of Florida and also within the state. Gift funds are allowed. So you have somebody that's, hey, I'm going to gift you the money so you can buy a home. There are programs available for that. Okay. Now, this is another little test for you all. Just take a little snapshot of this for a moment. Okay. So this is giving you an idea of down payments. Okay. Now, your typical mortgage cost, your one-time expenses is your down payment. It could be from 0 to 20% of the purchase price. Closing costs, lender fees, and settlement costs. This is all one-time expenses. What do you mean about a recurring expense? Insurance. You have to pay insurance every month. It could be the mortgage insurance, referred to as principal mortgage insurance. That happens when you put less than 20% down. It's just an additional insurance, not the insurance for the home, it's the insurance for the mortgage. Then you have your homeowner's insurance, and then you have property taxes. Most of these, I say 99% of this, is all collected cumulatively with your mortgage payment. And then your lender will make your insurance payment. They will pay the PMI insurance, and they will pay your property taxes, okay? One thing, remember we mentioned before, of owning a home is giving you stability. One thing that can change on your monthly payment is your insurance that you have control of, and your property taxes, which is county, and the, you know, once a year when you get those statements that say this is not a bill, please make sure you take note to see if it is increased. If it has, you want to reach out to your lender to discuss your escrow accounts. Okay. Now, these are the typical closing cost fees. Okay. It all depends what institution you're doing your mortgage at, okay? Application fees, points, origination fee, processing fees. What are points, okay? It's the cost of the interest rate that you have selected, okay? Third party fees, appraisal fee, if you're going to have an attorney, courier fees, all these fees here is an absolute requirement in a transaction to close a home. Okay. Here's some worksheets that you can use as well to calculate your maximum loan amount. And now navigating the mortgage process, different types of lenders, loan options, gathering, assembling your team. Okay, these are different types of lenders. You have banks, credit unions, mortgage brokers, and other financial institutions. What you want to remember as you shop for a mortgage is the loan terms. You want to look at interest rates and fees, very important. Okay, now please note that interest rate when you're doing a pre-approval is only based on the market of the day and will change. Your interest rate, you cannot say this is my interest rate until you have secured a contract of sale and now your pre-approval is converted over to a purchase loan. At that time, your loan officer will discuss interest rates again, and then you have what they call lock the rate, and then that is not going to change, okay? Now, consider your financial goals and prioritize what is absolutely important to you, okay? From your low monthly payment to, you want a shorter or longer term, you want to, how long you're going to be in your home. Most people buy a home and they stay in it between 5 to 7 years. So if you get pre-approved for an amount that, wow, you thought you was going to get pre-approved for much more, I tell you, like I tell everyone, start now, okay? Buy what you can to then later on get what you want. Remember, I bought a townhouse, I waited a few years, and then I bought my single family residence, okay? These are places that you can, start looking for a lender, your own bank, real estate professionals, friends, homeownership education, providers, employee benefits, HUD-approved agencies, okay? Now, there are different categories of loans. You have fixed rate, where when you lock that rate, that's the rate that you're going to have for the whole 30 years, if that's what you choose, okay? Adjustable rate loans means that the rate is fixed for a certain amount of time, and then it's going to adjust, okay? You have your government loans versus your conventional loans. Unlike conventional loans, government secured loans are backed by a federal agency, okay, such as the FHA and the VA. You have conforming and jumbo. Every year there's a set figure of your conforming loan amounts. Once it goes over that certain amount, it's considered a jumbo loan, okay? You have loans with or without mortgage insurance. If your down payment is less than 20%, of your home purchase, most lenders will require mortgage insurance. Although there are programs out there that offer maybe like 100% financing with no mortgage insurance, okay? So it all depends where you're going to go shop for your lender and what products and mortgage solutions they have for you. What mortgage is going to fit your needs, okay? You want to be able to, have that conversation with that loan officer who's going to guide that ship for you to purchase your home and your journey to purchase your home. During this meeting, you want to listen and, you want to express your concerns. You want to express what's important to you, okay? You have to help your loan officer understand your current financial situation, okay? Understanding how much you could qualify for is crucial. Although sometimes you might qualify for 350,000 and everything is fine with your debt to income ratios, but guess what? You don't want to spend that much, okay? Then you can say, hey, give me a pre-approval for less money. I don't want to go over XYZ amount of a monthly payment, okay? A pre-approval, like I said, will help you decide. Pre-approval is number one. You have to meet with a lender and have your credentials looked at, pre-approved. Pre-approved means a lender is looking at your documents, okay? Pre-qualifying means that you picked up the phone, you called a bank, and based on what you told them on the phone, that's what they're giving you a pre-qualification for. What you want is a pre-approval. You want a lender to look at your pay stubs. You want a lender to look at your bank statements. You want a lender to look at all your credit. Okay. Now, gathering, it's like cooking, baking a lasagna dish. Okay. You got to get your ingredients together to make that delicious lasagna. It's the same thing with the loan. You got to get all your documents, all your ducks in a row. This is a good map of what you should be able to start putting together. Okay. And when a lender asks you for 1 month's pay stub, it's usually not a snapshot of your phone. You want to be able to give them a complete pay stub that shows year to date income. Okay. Social Security, alimony, child support, 2 years of tax returns, profit and loss statements if you are if you're self-employed. Okay. And when your lender asks you for documents, it's all pages, page 1 to 10. Even if page 10 is blank, you want to be able to submit that. Now, the big question here is student loans. If when your student loan appears on your credit report and it comes up as 0 as a monthly payment, most lenders are required to use, depending on the loan program you're going for, 0.5% or 1% of the outstanding student loan balance as your monthly payment. And that will go towards your debt to income ratio. Or you're able to provide a student loan statement indicating what your payments are, when they're going to start, and that can change those figures that the lender has to use. What is a pre-approval? Well, you want to be able to get a pre-approval before you go shopping for a house, because it's like if you go to the supermarket and you fill up your card and you go to check out, you put everything on that running belt, and then you ask the cashier, well, how much do I owe you? They're going to tell you how much you owe, and then you're going to tell them, okay, I'll be right back. I'm going to go home and get the money. Well, what's going to happen with your food? They're going to put it all away. The same thing with you shopping for a home without a pre-approval. You find a home, you fall in love with it. This is it. I got to have this house. And then you look at your realtor and you're going to tell your realtor, okay, I have to go to the bank now and I have to go get a pre-approval. I promise you that property was not going to be on the market anymore. Having a pre-approval is going to make you ready, willing, and able to negotiate a contract and to lock in that house that you just so much fell in love with. Now, pre-approval has an age to it. Okay. Typically, we recommend 90 days. Okay. It's all good up until 120 days. Why 120 days? Because that's how long your credit report is valid for. And here's some forms for you to review, which gives you an example of loan estimates. A lender is going to, once you do a pre-approval, we could still do a loan worksheet, because it's not a loan estimate unless it's an actual loan. But even at pre-approval time, we could give you a worksheet to give you an idea what you're working with. Okay. Assessing your team is absolutely key. Okay. You've all heard of the saying, it takes a village to raise a child. Well, it takes a village to get your house. Okay. Finding the right resources, finding the right loan officer, the real estate agent that's going to find your home. Who are you going to hire to inspect that home? Okay. Homeowners insurance agent, shop around. Okay. Title and settlement agent. Usually in a purchase in the state of Florida, it's the seller that selects this. Okay. You want to reach out to your family, friends, ask them who they've had a good experience with. Okay? Now, our team here includes our loan officers, loan specialists, underwriters, and closers. This all occurs once your loan gets started. Now, finding the right real estate agent is key. We take care, the lenders take care of your money. They're the ones that's going to physically take you to see those properties. You want to find out how long you've been in real estate. Are you full-time? Do you want to work with somebody that's full-time in this business, or it's okay for you to work with somebody part-time? Are they familiar with the communities you want to live in? Okay. do they know and understand how to work with first-time home buyers and move up buyers? Okay. Sometimes first-time home buyers need a hand holding, and that's okay. All right. But interview, check people out. Okay. Now, closing with confidence is like, before you close, you want to be able to understand from beginning to end, but especially right before you close, you want to understand that closing cost. Okay. Banks will give you at the beginning an initial closing loan estimate. These figures can change, but banks are very conservative on what they're estimating. Okay. These costs can go down, but you want to understand all aspects of that. Okay. And here we have a sample of, what they call a closing cost disclosure that you have the right to review 3 days before your closing. Okay. Now, in conclusion, we want to be able to emphasize how important homeownership education and credit counseling is. For many people, if they're not ready, we do have your lenders have, I'm pretty sure, trusted agencies that they can work with that can help you. Many of them not costing you anything. Okay. Currently, these are the local resources that we work with. They help you with pre-purchase counseling, with buying a home. What is that all about? Okay. I want to buy my house, but my credit is not where it's at. Well, these are HUD approved agencies, okay, that can help you get there. Okay. If you know you have a challenge with a credit and you just renewed your lease, but this is the last time I'm renewing my lease, I'm buying my house, start early so then you can know what your position is going to be within a year. Now, to cover the different resources available, there are down payment assistance programs available within our area. Truist, this is the bank that I work for, as Truist Bank. Okay, we do have a program that's 3% of the purchase price up to $7,500. The state of Florida has these 3 different programs. This is up to 5% of your loan amount, up to 35,000. Okay, there are different down payment assistance programs available. When you're getting down payment assistance, okay, and you're closing with the state of Florida programs, you want to be able to do a contract for 45 days. Okay, typically when you're doing down payment assistance programs, you want to find out which programs your lender is going to fund, because that means that they have control of how fast you can close. Okay. But if there are also external down payment assistance programs. Okay. The external down payment assistance programs means that the lender that you're doing the loan with is not the one that's going to fund that down payment. At closing, these external down payment assistance programs are sending the money straight to the title company and settlement agents. So we have to go based on their timelines, and their timelines, it could vary. They could say, well, it will be 2 weeks for an approval. It could be 6 weeks for an approval, but we have to go based on their timeline. I do hope that everything that I've covered today has been very informative for you, and we'll have the opportunity now to ask questions. Peter, Matthew?
Hey there, Madeline. Thank you so much for this awesome presentation. I know for our audience members, this was full of a lot of really good info. And so, if you saw something that you're interested in learning more about, we're actually going to be posting a recording of this on our website within the next couple of days. So if you want to go back to a slide or something, feel free to go to that YouTube page for the video, and you can pause it at any point. I know she posted some really great templates and stuff. So hopefully you can find some value in the recording. So we're going to kick it off with our Q&A now. If you joined us later, we are going to be able to ask some questions to Madeline based on the topic of today's video. So if we have some Q&A questions, some prepared questions, and then Madeline, feel free to provide any kind of responses that you think might be able to help answer some of these questions. So we'll kick it off with a question. Are lenders looking for the 43% 33% debt to income ratio after assuming what your mortgage and associated costs will be, or is this prior to applying for the mortgage?
This is while after you've submitted your application, okay, and you're giving us an estimated amount of how much you want to purchase and how much you want to borrow, okay. Once we run the credit report, we estimate based on your future housing payment and your current debts on your credit report.
Awesome, thank you. And then we also have, what are your thoughts on using bankrate.com or other similar sites to locate the companies who offer the best rates?
Bankrate is a very reputable website. I cannot comment on other websites and their validities, but Bankrate is a good website. You do want to check with your lender. I would recommend starting with your lender first.
Thank you.
So Madeline, got a question here for you. Is it better to wait until the housing market gets better, or should I buy when I'm able?
That is the $1 million question, Peter. I mean, last year and prior to March of last year and for years, interest rates were like at the low 3%. Okay, let's look at this. The Treasury did this over 10 years ago to stimulate the market, and a lot of people got used to seeing the interest rates at 3%. So now when they're trying to level it off to bringing it back to what is customarily usually is, which is in the 5 and 6s, people like, oh no, I'm going to wait. Well, I don't see rates going down. Okay. I always tell everyone, start somewhere. Okay. Start now. Whenever it's in your mind, that is when you need to start buying. Okay. What are your options? Weigh your options. You want to either continue renting, paying someone else's mortgage, helping someone else create wealth for their legacy, or you want to start yours, or you want to start where you can start this race and buy what you can now to get what you want later. So I would say, as soon as you're ready in your mind, go for it.
Great, thank you. That makes a lot of sense. So kind of following up with that one, what are the biggest pros and cons of renting versus owning a home?
Well, the biggest pros and cons, as we covered in the first few slides, were, I mean, when you're renting, you could just pick up and leave. Okay. When you're owning, you're not going to, leave your investment behind. The con in renting, every month that you're paying that rent, that's not creating an increase in your money. Every time you pay your mortgage, though, okay, over time, it's going to increase in value. Real estate historically has increased in value. Even if we go through a little snafu of sometimes, the market goes down, real estate is the safest investment out there. Now, do you want to be in a position where a landlord is going to say 30 days before your lease expires? Because there are no rent control laws here in Florida. Your rent is going up $500. Here you are, a family of 5, okay? And where are you going to go in 30 days? You're either, the security of having a home controls your security of where you live as well. If something breaks in the renting, pick up the phone, the landlord comes and fix it. But just be aware, the landlord is going to come fix it when they can do it. If you own a home, well, it's you who have to fix it, okay? Or like having your resources available. Start having a list of who your plumber is going to be, who's your electrician, who's your handyman, who's your, landscape. I will not mow a lawn, Peter and Matthew. No, I pay every month. They come and they mow that lawn. I do not have the patience for that. Absolutely not. So I happily budgeted that. Keyword, I budgeted that cost into there, okay? But it all comes down having a personal decision whether you want to buy or rent.
Madeline, you brought up a really good point about, those families that might be, working paycheck to paycheck. And that's a large percentage of, the community that we live in. And so, my question for you are for those folks who are, struggling to make ends meet, but they're aspiring for, that dream of home ownership. What are some of your biggest recommendations so that they get themselves prepared to take that plunge into purchasing a large asset like a home?
Well, although there are down payment assistance programs out there and 100% financing programs out there, I would always say is having a backing of reserve. Having a reserve kind of gives you that security, okay? And although you have these programs out there that can help you get into a home, I honestly, realistically think that someone should have a minimum of $3,000. Why? For your upfront cost. Why? Your appraisal fees are going to be, appraisal fee is due once you get a contract of sale. That's $690, an example. You're going to want to do an inspection on the property that you're getting. That's $350. If you buy, so let's say those two things are the absolute minimum of upfront cost, and your lender was able to get you the 100% financing, no coming to closing with no money. But now if you're getting a manufactured home, that's an engineering report. That could be $500, okay? So there are some money that you really should have saved up before you decide to make that move.
Okay, and that ties into a question we have from the audience. And I know this can probably vary on location because there's going to be some locations that have a higher land value than others. This question is, what would you say is the appropriate amount to have saved up before purchasing a home?
That's it all depends on the program you qualify for, because there are programs, as I was saying, that require no money down, but they require reserves. Reserves are money that is in your bank account after the transaction has occurred. That they say, okay, for example, she has $10,000, they're using $5,000. That means they have 5,000 reserve, okay? So in reference to a lender's point of view, it's going to be based on what reserves you have, depending on the guidelines for the programs you're approved for. If you're looking to just get started, and as I said before, you should have at least a minimum of less than, close to 3, because you're going to have those fees up front, and you don't want to put them on your credit card. Like, for example, a client of mine did that, and although I told them not to, and now that it's final approval time, that they put a lot of those upfront costs on credit cards, and now it's changing what they call their debt to income ratios, and that can affect you too. So you want to have some money up front to do those upfront cost expenses.
Thank you.
Any other questions?
Yes, one more question. We have can you listed several down payment support systems and programs out there. What are your thoughts on, we have a question from the audience on what are your thoughts on the DARE program in Tampa?
The DARE program in Tampa is a program where it's if you buy within the city of Tampa, you can apply for the down payment assistance up to $40,000. They also have the East Tampa CRA down payment assistance program. If you purchase in East Tampa, that program you can apply for is up to $50,000. Because East Tampa is within the city of Tampa, you therefore can qualify for both programs up to $90,000. This is a program where it's an excellent program. I've closed several of these programs already. It's an excellent program. Be aware that because we do not, I as a lender and all lenders in this area do not manage that down payment assistance. The city of Tampa have selected 3 nonprofit agencies, okay, to administer the application process for that. The estimated time frame can be between 2 to 3 months to get what they call a reservation. That means that they looked at your record and this is what you approved for the DARE or the East Tampa CRA. At that point that you have a reservation form, then you go back to your lender that originally pre-approved you, and based on that amount that at the beginning, your lender projected how much you was going to get from the DARE program or the East Tampa, okay? Now that you have the reservation form, now you go back to your lender and they'll update your pre-approval. But keep in mind, if you're going for the city of Tampa down payment assistance programs, you have to allocate time for that approval because it can take 2 to 3 months.
Thank you.
Well, Madeline, I got a two-parter here that I wanted to throw out to you. So this entire process could be overwhelming. What are some first steps you should take that our panelists or our members should take before starting the process and buying the home? And then on top of that, what are some of the red flags they should pay attention to when considering finding a bank or a credit union for their mortgage?
Well, the fees. Fees is a huge red flag. Absolutely. Okay. You want to be able to review your fees. You want to be able to, feel that your questions are answered. There's no question that's not important, especially for first-time home buyers. This is like going into the twilight zone. So that's why it's important that you have your team that we discussed before, that you have a loan officer that you're going to be able to ask your questions, okay? And that you could get full answers. If I give somebody an explanation and I feel that they're not understanding, then I'm not explaining it the way they understand it, because the way one person understands it, it could be different from another. So you want to ask that lender, do you deal with first-time home buyers? Okay, because dealing with first-time home buyers is special. You got to hold their hand. It is what it is. You have to hold their hand. But you want to have red flag. There are red flag. If you feel something's wrong, it's wrong. The minute some lenders tell you, oh, don't worry, I tell everybody, worry to the day you close on that loan, until the day you get the keys. Don't accept answers of, oh, don't worry, that's okay. No, you want to understand. You want your questions answered, okay? But you most definitely want to look at your estimates, okay? Your worksheet estimates prior to. If you see that the points, okay? If you see a large amount of money in that estimate sheet for points, you want to question that. If you see a whole bunch of fees that you don't understand, you want to question that, okay? So fees, I would say fees is a big number one red flag you want to look at. And you want to work with a reputable company. You got to make sure it's a reputable company. I hope that answered your question.
Yes, thank you.
All right. Just a heads up for our folks. Today we have just a couple minutes left, but we do have some remaining questions. Before you head out today, make sure that you, once you head out of the webinar, you'll be prompted to complete a survey to share your satisfaction with the event today. All of your feedback is anonymous, but greatly appreciated. And so, like I said, we have a couple more questions and from the audience, Madeline. The first one is going to be, will one generally qualify for a better rate if they are putting down a larger down payment, i.e. 15% versus 5% down?
Yes and no. Because you can have 20% down, but then you can have a very low credit score. Okay, so there's a lot of moving parts that factors in. It's not just the amount of money. But typically, yeah, if you're putting a larger down payment, that will give you like a lower interest rate. It's less of a risk for the bank. Okay, but it's a lot of moving parts. It's your application, the risk, and your credit, and how much you're putting down.
Awesome, thank you. And then I was hoping you could provide some clarification for this one question that we received. And I'll quote them. Those down payment assistance programs seems like applying for another loan. I see how it could help, but I'm not sure about getting further into debt could help pay for mortgage. How much quicker can a down payment assistance program get my house paid for?
Okay, the down payment assistance programs, yes, it's a second lien on your home. Generally is 0% interest for 30 years, and there's no payment due on it. Depending on the down payment assistance, some of them are forgivable, others are not. For the city of Tampa and the East Tampa, one of them is 7 years and then it's expunged and you don't owe that money. The other one is 10 years and it just comes completely off. It's no debt to you. The lien comes off and you no longer owe that money. The state money, the state down payment assistance are not forgivable, okay? If you move and that's no longer your primary residence, you have to pay the down payment assistance back to the state because this is how they keep that program going. When I moved to Florida, I used it was $7,500 at that time. I used it and I was so happy to pay them back when I sold the house, from my proceeds, I did pay it back. So it all depends on the down payment assistance program you're going for, whether it's going to be an additional debt or it's going to be fully forgiven.
Cool. Thank you, Madeline. I got one last question for you as we wrap this up. And this is about the credit score. Is there a minimum credit score one should have before buying a home?
I could speak for Truist Bank. Our minimum credit score is 620. Okay, but I just want to put out there that the lower your score, the less options, the higher your score, more options. The state of Florida requires for their down payment assistance program, and I could say it because it's a state agency, and I can divulge that those credit scores is 640. Okay, but you would have to check with your lender to see what based on your pre-approval, what you could qualify for.
Cool. Thank you very much. Very informative.
Awesome. And that actually covers all of our questions today. So Madeline, thank you so much for taking the time out of your day to, help us learn more about the process and the folks joining us today. We really appreciate your expertise and sharing some your insider insight on, the process of buying a home.
Thank you. I thank everyone for participating today. I just hope I was a ray of sunshine and of information. But most important, your questions should always be answered, and never expect less. And good luck on your journey.
Awesome. Well, thank you all again for joining us today. What you can do is, before you head out, make sure that you complete the survey that's prompted to you at the end of the webinar. We greatly appreciate your feedback, and make sure you register for our upcoming webinar series. Peter, can you give us a little hint on what our folks will be listening to next month?
We are going to learn how to start your own business. We're going to be joined by Career Source Suncoast and some other exciting panelists, and learn about how you can become a little entrepreneur and take care of start your own business. It could be very exciting.
Thank you, Peter. And thank you again, everyone. It's been great spending the past hour with y'all. I look forward to seeing you next month, and have a great rest of your week.